So we are here on the chart, and so we are going to do the technical analysis here. So this technical analysis will be in two parts. First, I will do the technical analysis on the weekly chart, and then I will do the technical analysis on the daily chart. And this way, we will be able to get the most accurate results as we are getting for last couple of weeks. Okay, so first I'm going to start with the weekly chart. So weekly chart, so this is the weekly chart and these are the weekly candles. Remember, these are the weekly candles. So this candle, this bullish hammer, it was formed for the week of September 20th. So this bullish hammer, this bullish hammer signifies that there is going to be a bull movement in the market, means an upward movement in the market. Okay, but the limit of this movement will be defined by the moving averages on the daily chart. Okay, so we cannot say that the market is now going to move up and going to hit 4,800 or 5,000. So that there is a limit, and this limit will be defined on the daily chart. So once we cover the weekly chart, then we will cover the daily chart. Okay, so this is the bullish hammer. So bullish hammer often signifies a bull movement in the market. Means the next candle that is going to form, it may try to move up. Remember, it may try to move up, but then the fate of the market will be defined by the corresponding candles on the daily chart. Okay, so the market came down this heavily. So there is a good news here in the market that after almost 1 year, okay, since November 3rd, 2020, after almost 1 year, the market finally came down, and it came down means it crossed all of these three moving averages. That was not seen in last 1 year. So this was the very first time the market behaved like this. Okay, so this is an early indication that the market is expected to enter into correction anytime soon. Okay, means the bull movement is kind of the bull movement is over, and the market may try to enter in the bear movement or in the correction anytime soon. Okay, so one more reason why this kind of candle was formed, because the people or the traders, okay, the hedge funds who were bullish in the market, okay, so they were bullish in the market for many months. Okay, so they did not expected this thing to happen. They did not expected this thing to happen, means the fall in the market. But because there was this great fall, so the stop losses, they were hit, and the traders or the hedge funds or the market or these the okay, the people who were still holding the positions, okay, so they try to move up the market through a rebound. Okay, so that the people who believe that the market is still moving up, so when these people they buy, then the people who are holding up for the long time, they will sell. Okay, so you can think of it like a trap. Okay, so this is how the traps are built in the market. So that means once the market movers or the market manipulators, once they gain the confidence of the people that the market is still in the bull direction, then they will sell heavily, because they know that the correction is coming. So they will sell heavily, and this is how the buy and sell, okay, orders will be they will be equated. Anytime this will be more clear. Anyways, it will be more clear on the daily chart, like what is expected to happen. Okay, so this was the interpretation of the candle. The resistances and the support, okay, resistance and support, they will remain the same. So we have this very critical resistance at 4525, 4525. Okay, very critical resistance. Then we have very good support, okay, at 4396, or you can say 4400. And then we have another this is very heavy resistance at 4289, or you can say 4290. Okay, remember one more thing, as I have told you, a lot of times in my previous videos also, that the support and resistances are not just one number, but they are the zones. Okay, support and resistances are the zones. So if I say that the resistance is 4525, so you can add or subtract plus minus 25 plus minus 30. Okay, so this way a zone will be created. So you can say the zone is 4550 to 4500. Okay, so the market will oscillate between the zone. So when the market crosses above the zone, then only we will say that the market has crossed the resistance. And if the market remains below the zone, which means that the market failed to cross the resistance. Okay, the same applies to the support. So it is a zone, it is not a number. Okay. um, Now if we do the technical analysis here on the weekly chart, okay, then we have the moving averages. Market closed above the moving averages, so technically it is bullish, but we will call it as a weak bull market, weak bull trend. Okay. And if we talk about the Chimoku, it is still up. And other technical indicators, if we consider other technical indicators here, so we have stock RSI. Stock RSI is clearly bearish. Stock RSI is bearish. MACD is also bearish, means both stock RSI and MACD, they are bearish and they are supporting the bear market. Okay, the bearish trend. RSI means the momentum is building up, and momentum is building up in favor of bears, not the bulls. Okay. So this means that through the technical analysis, so only the moving averages are supporting the bull trend, else all of the technical indicators are saying that the market is coming down, which means market is giving you an opportunity, a golden opportunity to sell on the lower high. So it will be seen as a lower high, that the market is trying to build a lower high and then it may come down. So this thing will be more clear on the daily chart. Okay, like what will be the limit, what will be the number here when you are about to sell or when you should actually sell. Okay, so now let's move on to the daily charts. Okay, so we are here on the daily chart. Okay, this is the daily chart, and these are the daily candles. These are the daily candles. Okay, so if you see one thing here, that these two candles, the last two candles, they are bullish in nature. No doubt they are bullish in nature, but they fail to close above these moving averages. They fail to close. Okay, so you can think of it like this thing. Okay, like this this kind of, okay, this bull candle. So there was this bull candle, but it failed to close above these moving averages. And then on the next day, this candle, it failed to close above the moving average, and then finally the other day it came down and then down. Okay, so that's the same thing is the same thing can be seen here, that the candles, okay, on the daily basis on September 24th, it failed to close above these two moving averages. Okay, they are the critical moving averages. One is the SMA of the Bollinger Band. Okay, so it failed to close above the SMA of the Bollinger Band. So it is not in the bullish side of the Bollinger Band, but it is on the bear side of the Bollinger Band. Then again we have this critical moving average. This is WMA. Then it again failed on two consecutive days. Okay, it failed to close above. So this thing clearly signifies that the market is still not bullish, but the market is bearish. Okay, so what can happen on Monday, what you can see or what you can expect on Monday. Okay, on Monday you can expect, like, if you see a gap up opening, in that case the market may try to move up. But you need to go on the hourly chart. And on the hourly chart, when you see that that on the hourly chart the market is hitting this upper Bollinger Band, okay, or the SMA of the Bollinger Band, then is the time to sell. Then is the time to sell. Okay, or if you want to play safe, in that case wait for Monday. Okay, do not trade on Monday, and wait means wait for the candle to form on Monday. Once the candle is formed, and once you see that if the candle, look, if the candle form if this candle on Monday, if it closes above the moving averages, then for sure market will move up. And if it fails to close above the moving averages, then nobody can save the market, okay, to enter into the correction. So market will enter into the correction for sure. Okay, uh, so so this is the thing. Okay, if you trade aggressively, then as soon as the market moves up, okay, you can sell. And if you want to play safe, then wait for Monday. Okay, wait for the opportunity and then, okay, go for it. So the market is around 4450. Okay, so my advice will be, again, my advice will be 4450. Okay, if you want to enter into the market, so you can buy a put of a put of 4,450. Okay, and if you trade aggressively, then you can buy a put of 4,400. So as I've as you have seen in that chart, okay, that I've shown you in the beginning of the video on the that the Monday Madness. So there was a return of 250% in 4,450, and there was a return of almost 700% in 4,400. Okay, so this is about the options, the put options. But if you trade in equity, in that case you can sell the stock. Okay, so you can look into the stock that is following the S&P 500 index as it is, as is. Okay, you can sell that stock and then wait for the stock to come down, and then you can buy. Okay, this way you can make like 5% or 10%. Okay, when this thing happens. But in options, if the market comes down heavily, for sure you will make at least 100%, 200%. Okay. If we do the technical analysis here, so first the moving averages. If you see the moving averages, I've told you that the market failed to close above the moving averages. Okay, in order to get the direction of the market must be either side of these the moving averages, all of the moving averages. Okay, but the market failed. uh, so through moving averages, okay, it may look like that the market is moving up, but actually it is holding up. It is holding up. Okay, chances are it may come down heavily. Okay, and the Monday will be a decisive day here. Through Ichimoku, so Ichimoku is supporting a bull trend because the market closed above the Ichimoku, not below the Ichimoku. Okay, and if we talk about other technical indicators here, MACD and all. So we have stock RSI. Stock RSI is in weak bull mode. It is bullish. Okay, means it is trying to be bullish, but it is weak bullish. MACD is not supporting the bullish trend. It is still bearish. It is still bearish. RSI means the momentum here. Momentum is still supporting the bears, not the bulls. Okay. Divergence is okay here. So through all of the technical indicators here on the daily chart, through all of the technical indicators, it is it is very much clear that the market is expected to come down. Okay, that it is a bear market. Okay, so a long-term correction is due in the market. So we are expecting the correction to happen here. So this is, so market is forming a lower high. So if you see a pattern, market came down, then market moved up. So market is forming a pattern of lower high. So what we do on the lower highs, we sell. Okay, in equity we sell, and in options we buy puts. So market is forming a lower high here. So but still, be careful, because we do not know what may happen on Monday. Okay, so if the market manipulators, if they want to build a trap, then in that case they will try to close the candle above the moving averages. Okay, because once the candle closes above the moving averages, then the people will enter into the buying positions, and then they will buy, and then the market manipulators will sell. Okay, so just wait for Monday and see like what happens on Monday. So this is my advice. So you can buy puts. Okay, so what I see here is that it is a lower high. It is a lower high. Okay, so this is often formed whenever the market goes down, then a little pullback or a bounce back or a rebound, and then the market will come down. Okay, so this is how it works. uh, okay guys, so this was my technical analysis for S&P 500 index for the week commencing from September 27th. And do not forget to check the links to the programs in the description of this video.